Welcome my friends, this is Professor Rohit Shroff and I welcome you on behalf of JK Shah classes. In this video, we are going to discuss Inter-CA Audit RTP for November 23. So our discussions are going to be into three parts. Firstly, the amendments. Luckily, there are no amendments. Secondly, your MCQs, that is case study based or general MCQs, and last is going to be the descriptive questions. My friends, what I would insist is almost all the questions are part of GKSE material. We have already discussed this. I would suggest you pause the video, you hear the question and try to interpret what will be the answer and then see that particular answer. I have given the page numbers wherever it is in a textbook. You can go to that page number. Also mark that this is a recent RTP question, so when you revise it next time you are aware of it. There are certain questions which are a new addition and you needed to make sure that you focus on those questions. I have already marked star mark to all those questions. So wherever I have put a star mark, make sure you refer to those questions. A lot of questions which are repetitive, in case if you are short of time, don't see this. So let me just take you to which questions you must refer. So here I have marked all the things important. So MCQs are manageable, but still I would suggest once go through the case study based MCQs. You must refer question number 6. You must refer question 8, 9B, 10, 12, 15, 17, 19, 20B are the questions that you must refer. So all the students who are short of time, at least crisply go through this particular questions, all the JKC students, because rest every question has been very detailed covered. There's a few addition, few the different way of asking, so you must go through this particular questions. So starting ahead, firstly with the discussion of our amendments. So they are printed a lot of things, you need not worry, these are already covered. We have studied the updated things. If you see the RTP of the previous attempt, same thing has been copy pasted. So whenever institute makes a module, till the time they don't issue a new module, they keep on reprinting all the amendments. So all these amendments we have already covered. If you can see my previous video of May 23, the same thing have been printed in that RTP as well. If you go to November 22 RTP, still the same thing has been printed there. So in the lectures we have covered, you need not do anything from here. You can straight away dive to the discussion of your case study based MCQ. So once again repeating, no new amendments for auditing paper. So let us begin with the case study based MCQ. Karthik, a CA student undergoing his article training, is a part of engagement team conducting the statutory audit of MSC Auto Private Limited, a company engaged in manufacturing of automobile spare parts. The company has its manufacturing located at Pimpri-Chinchwad Belt, Industrial Belt near Pune. It is a profit-making company and one of the most sought after by banks in the area due to its good track record. The following is extract of the financial information of the pre-audit financial statement of 22-23. So they've given everything: share capital, long-term borrowing, short borrowings. While going through the schedule of long-term borrowings and books of accounts, we find that the reduction in the long-term borrowings is on account of full payment of the term loan in the month of April 22 taken from the bank in the past. However, he finds that charge in respect of the above loan in favor of the bank is still subsisting on MCA portal beyond statutory period due to non-registration of charge satisfaction. He read about the assertion pertaining to the balance sheet and income. He was not sure about the nomenclatures assigned to assertions pertaining to the balance sheet and income statement. The team had attended physical verification count of the company at the year ended in accordance with 501. Besides, the trade receivables have increased from 25,000 to 60,000 in the year. His understanding is that increase in the trade receivables as compared to the last year signifies longer time taken by the customers to make their payments. Considering substantial rise in revenue from operation company in the year, the team wants to ensure the revenues of companies are not overstated. Now based on this, what they are asking you is, keeping in view the description of the full payment of the term loan in April 22 taken from the bank and non-registration of charge, with the following statement is correct. So the above fact with reasons is required to be disclosed by the company in the financial statement. Why? Because it is a requirement of the Schedule 3. So if a charge is created on an asset as per the Schedule 3 of the Companies Act, we need to disclose the same. Here answer is going to be C. Next, the company's short-term borrowings have increased from 20 to 23 as compared to last year. One of the assertion that is not relevant to verification of short-term borrowings. So what is the assertion not relevant to borrowings? Existence. So existence is definitely relevant to us. Occurrence. See, occurrence is not for borrowings. It is an assertion for P&L income statements. It is not for balance sheet. Completeness, yes, it is relevant. Valuation. So which assertion is not relevant for short term? It is occurrence. As regards team's attendance at the physical inventory counting process of the company's inventory in SF 501 is concerned, which of the following is not relevant? Will you do inspection of inventories? Definitely we will. Checking appropriateness of the methods of valuation. See, at physical counting, we are not going to check the method of valuation. So this is not relevant for us. Evaluate the management's instruction. Yes, we will see how management is performing the test count and we will also perform test count. Hence, the answer here is B. Next, the company's trade receivable have increased during the year 20 to 23 as compared to the last year. Which of the following is the most appropriate regarding the understanding of Karthik on the issue? The view of the Karthik. So what he's saying is, see, sales have, here the trade receivable is increased. His view is that because the customers are not making payments, timely payment. See, here where they have clearly said there is a substantial rise in the revenue. Since the revenue has increased, hence the trade receivables have increased. Here he cannot say it is due to the customers are making payment. Hence the view of Karthik is not correct here. The view of Karthik is incorrect. Yes, here again correct. Hence answer is going to be B. Next, the team wants to ensure that revenues of the company are not overstated. Which of the following is not likely to be an audit procedure? So obtaining confirmation from customers, see, obviously we will obtain. Reviewing GST returns to reconcile, yes, we will definitely do see, so to understand whether it is not overstated. Reviewing credit notes, yes. Debit note is not relevant to sales, hence procedure D will not be relevant here. So this was our case study number 1. Case study number 2. CAX has accepted offer for conducting statutory audit of financial statement of DOS Solution Private Limited, keeping in mind the requirements of the SA, including those requiring to SA 300. He plans audit so that it is conducted in an effective manner. He knows because of inherent limitation of audit, there is an audit risk that the financial statement, even though audit is properly planned and performed in accordance with SA. Considering the nature of operations of the company, he has decided to use audit sampling in performing audit procedures. The various areas of his testing include the testing of controls over revenue, expenditure, assets, liabilities. Besides, he has decided to perform test of details in respect of all areas of the financial statement. While verifying the test of controls over purchase orders placed by the company based on selected audit sample, he has erroneously concluded that SOP for placing purchase order are not being strictly, and controls are less effective than they actually are. Okay, so he has erroneously concluded this. Further, while testing over wage payment, he tested 20 sample of the wage sheet of different sections of the company and finds that wage sheet has not been signed by the authorized officer of the company. The rate of deviation was earlier set by him at 3%. During the course of the designing the procedures of selecting sample for verification of trade receivables, he decided that divide the trade receivable into groups, that is in excess of 10 lakhs, balance of 750 to 10 lakhs, in the range of 5 lakhs to 750 and so on. He planned to pick up different percentage of items from each group. A random sample is chosen from each group using random number tables. Some of the trade payables of the company were outstanding since long. He decided to merely verify the arithmetical accuracy of the aging schedule. Aging schedule means since how long it is pending, and its reconciliation with books of accounts. Therefore, the nature of audit procedure, nature of financial reporting itself, and need for the audit conducted within a reasonable period of time and at a reasonable period cost all lead to inherent limitation. Right? So, this is the case. Let us go through the questions here. So, the first question they are asking is, the auditor has erroneously concluded that SOP for placing purchase order are not being strictly followed and the controls are less effective than they actually are. Which of the following statement is likely to be true? So, somewhere this is a sampling risk and he's concluding that controls are less effective than they actually are. So, this will affect his what? Efficiency. So, answer here is going to be C, that is sampling risk and affects the audit efficiency. The auditor tested 20 wage sheets in the different sections of the company and finds that one wage sheet has not been signed. What is this? Tolerable misstatement, tolerable rate of deviation, or actual rate? This is nothing but the actual rate, no, because this is what he has found out after checking. So, this is actual rate of deviation. Which method of sampling for verification of trade receivable has been planned by the auditor? This is nothing but stratified sampling, because we have created groups, that is strata, and applied sampling on that. The auditor decided merely verify arithmetical accuracy and reconciliation of aging schedule to trade payables. The use of audit procedures can lead to, see, he's just checking arithmetical accuracy and reconciliation, is not applying sampling at all. Now, if any error occurs here, this is not related to sampling and this is going to be called as non-sampling risk. Keeping in view the inherent limitation of audit, which of the following statement is likely to be appropriate? Due to inherent limitation, auditor obtains conclusive evidence? No. Due to inherent limitation, auditor can be satisfied with less than persuasive? No. Due to inherent limitation, subsequent discovery of material misstatement in financial statement was conducted in accordance with SA does not indicate a failure of audit? Yes. Next, due to inherent limitation, auditor can skip difficult time consuming costly procedure? No. So, answer here is going to be C. So, let us start with the general MCQs here. Mr. A and B, the finance manager of XYZ Private Limited, are friends. Mr. A prepares the audit report according to the wishes and direction of Mr. B. In this situation, which essential quality of the auditor has been compromised? Professional competence, independence, skepticism, or due care? So, obviously, what has been compromised here is independence, because independence say we will not give report as per the wishes and direction of the person who appoints us. So, here what is compromised is independence. Dash occurs when the auditor form relationship with client where they end up being too sympathetic to the client's interest. Here, familiarity threat, advocacy, self-review, intimidation. Answer here is familiarity. When we are quite familiar, we end up being sympathetic to them. The person with the responsibility of overseeing the strategic direction of the entity and obligation related to accountability of the entity. Who is responsible? It is those charged with governance. All the students who have attended in the basic concept, we used to do this concept. Who are those charged with governance? People who are about management. So, they have the responsibility of overseeing the strategic direction and obligation related to accountability. Which of the following is risk that arises from use of IT system? Direct data changes, yes, but still let us leave the other options. Limited monitor access, in fact this is an advantage. Next, authorized adequate segregation of duty, again an advantage. Authorized access to data, again an advantage. So, what is a limitation here? Direct data changes is one of the limitation where there can be backend changes. Next, ABC Limited is engaged in manufacturing of 2 electronic wheelers. During the year, a customer has gone to a court due to incident of fire in the battery operated vehicle. The damages claimed are to the tune of 5 lakh. The company insists that the incident was due to the improper charging of battery and has nothing to do with the manufacturing design of the vehicle. The company's lawyer advised that it is probable that company is not likely to be held liable. It is likely to be reflected in the financial statement of the company. So, we are not sure, so in this case, where should we show this? We should show under as what? Contingent liability. So, whenever we are not sure, we will show this as contingent liability. So, this were the general MCQs. So, moving ahead with correct, incorrect. My friends, when you do correct incorrect, you need to focus on the reasons. Only and only the correct incorrect may not fetch you marks. See, institute has nowhere clarified that if you write correct incorrect, for example, your answer is correct, but your reason is incorrect, whether they will give you 1 mark, 0 marks, they have not specified anything. So you will have to consider only if you write correct reason you will get marks. So all the students who fail have somewhere failed because they have not stated the correct reasons. Hence what is required is you to focus on the correct reasons. So first, moving ahead with the question number 1, there is a direct relationship between the detection risk and the combined level of inherent risk and control risk. Combined level of inherent risk and control risk is ROMMS. ROMMS and a detection risk has an inverse relationship. If ROMMS is high, we need to make sure detection risk is low to keep the overall audit risk less. If the ROMMS is less, then we can afford a little higher detection risk. So यहाँ पे the question number 1 answer is incorrect. There is an inverse relationship between detection risk and the combined level of the inherent and control risk. For example, when the inherent and control risk are high, acceptable detection risk needs to be low to reduce the audit risk to an acceptably low level. On the other hand, when inherent risk and control risk are low, auditor can accept higher detection and risk and still reduce the audit risk to an acceptably low level. So here the answer is incorrect. Second, for auditor's opinion, reasonable assurance is absolute assurance. Again, the answer is what? Incorrect. Why is it incorrect? Because we are not giving an absolute assurance. A reasonable assurance is a high level of assurance, but it is not a guarantee. So reasonable assurance is high level, but not an absolute level, because there are inherent limitations of an audit, which will result in most of the evidence on which the auditor draws conclusion and bases the auditor's opinion being persuasive rather than conclusive. So evidence that we obtain are persuasive, not conclusive, and hence we can never give an absolute assurance. We can only give a reasonable assurance. Next, internally generated goodwill can be recognized as an asset. Absolutely no. AS26 declines it. Even if AN26 you are not aware, see, I cannot generate internal goodwill and show it in asset. In that case, everyone will, inflate their books of accounts and show higher assets that I have such huge goodwill. So obviously you cannot do this. As per AS26, internally generated goodwill is not recognized as an asset because it is not an identifiable resource controlled by an enterprise that can be measured readily at cost. So what you need to focus on is the reason, my friends. Only correct incorrect will not fetch you marks. So make sure you memorize this particular reason and write it well. Next, sample size is not a valid criteria to distinguish between statistical and non-statistical. See, statistical is based on mathematical laws of probability, whereas non-statistical is based on my experience and judgment. I will not select statistical or non-statistical based on the sample size. See, either of the methods, statistical or non-statistical, has zero impact on the sample size. It is not that in case of statistical sample size will be low, in case of non-statistical it will be high, or vice versa. So sample size is not a criteria for deciding statistical or non-statistical. So your answer is correct because they have stated sample size is not a criteria. So the decision whether to use statistical or non-statistical is a matter of auditor's judgment. Sample size is not a valid criteria to distinguish between the both. Whatever may be the approach, statistical or non-statistical, sample must be a representative. This means it must be closely similar to the whole population, although not necessarily exactly the same. So it should be as near as possible to be, though not exactly the same. So answer here is correct. Next, inclusion of emphasis of matter in the auditor's report affects auditor's opinion. My friends, if we give emphasis of matter para, are we modifying the opinion? No. We have studied we do not modify the opinion. So when we give emphasis of matter para, we are just highlighting a matter. It does not affect our opinion. We also state the same. Your answer is incorrect. When the auditor includes emphasis of matter para in the auditor's report, the auditor shall indicate that auditor's opinion is not modified in respect of the matter emphasized. Such paragraph shall refer only to information presented or disclosed in the financial statement. Hence, emphasis of matter para does not affect the auditor's opinion. Answer here again is what? Incorrect. Next, a perceived opportunity to commit fraud may exist when the individual believes internal control can be overridden. So, if I think internal controls can be overridden, obviously it will increase the risk of fraud. So, a perceived opportunity to commit fraud. So, an employee may commit fraud if he thinks internal control can be very easily be overridden. So, yes, answer here is correct. A perceived opportunity to commit fraud may exist when individual believes internal control can be overridden. For example, individual is in a position to trust or has knowledge or specific deficiencies in the internal control. Next, control environment can prevent, detect and correct a misstatement. No, it just helps you. It does not definitely prevent, detect and correct misstatement. It just helps you to evaluate what will be the control risk based on which we can determine ROMMS and NTE. So, answer here is incorrect. In the control environment itself does not prevent, detect or correct misstatement. It may however influence auditor's evaluation of the effectiveness of other control and thereby auditor's assessment of risk of material misstatement. So, based on control environment we can predict what will be the ROMMS and hence the NTE. Hence again the answer is incorrect. Last, unexplained decrease in GP ratio may result due to fictitious sale. They are saying decrease. See, if I show fictitious sale, if I increase the sale, GP ratio must increase, right? Now, I am saying GP ratio is decreasing. Will this be due to fictitious sales? No. If I want to reduce the GP ratio, then in that case, I may have to omit the sales. So, again, the answer here is incorrect. A fictitious sale will increase GP ratio instead of decreasing it. GP ratio normally comes down if there are unrecorded sales or reversal of fictitious sale entries recorded in the previous year or fictitious purchase or decrease in the closing stock. Right? So, again the answer is incorrect. So, once again for correct, incorrect, you will have to make sure that you focus on the reason. Only writing correct or incorrect may not fetch you marks. So, make sure all these 8 examples you memorize the reason and then move ahead. So, this was a discussion about correct and incorrect. So, let us begin my friends with the discussion of the descriptive paper. So, let us start with chapter number 1. Very basic questions of chapter number 1 which are already covered in the JKC material. We have already discussed in the class, but still let us go ahead with this. So, what they are asking is an auditor who before the completion of engagement is requested to change the engagement to one which provides lower level of assurance should consider the appropriateness of doing so. So, here what they are saying is they are asking to change the terms of engagement which provides lower level of assurance. So, this is nothing but SA 210. If it is providing lower level of assurance, we should consider whether the reasons are reasonable. If the reasons are reasonable, he will accept, but he will make sure that he does not give any reference to the original engagement and the procedures performed therein. But however, if he thinks though that the reasons are not reasonable, then in that case, if he is unable to change the terms of engagement and it is not permitted by the auditor to continue the original engagement, then he shall considering withdraw from the engagement where the law and regulation does not prohibit the same, and he will withdraw only after fulfilling the legal obligation, that is he will have to file ADT 3. So, this was our question number 1, that if there is a if they ask us to change the terms of engagement. Next, Mr. Z, the auditor of the company Different and Capable Limited for the year 22-23 explained to the audit team members about the objectives of independent auditor in accordance with the relevant standards on auditing. Explain the objectives. So, what they are asking you here is nothing but what? Objectives. What they are asking you here is nothing but what? Objectives. So, do not get carried away with the word independent auditor. All you are supposed to write is objective. What is the objective? To obtain a reasonable assurance, to express it via a written report. So, here we will have to state what are the objectives. That is, we want to obtain a reasonable assurance and we want to report on the financial statement. So, 2 very basic simple questions. Next, question number 3A. there are practical and legal limitations on the auditor's ability to obtain audit evidence. So when they say practical and legal limitations, see, they are talking about inherent limitation. But we need not write all inherent limitation. Practical and legal limitation, if you recollect our discussion in the classroom, this is nothing but due to the nature of audit procedure. This is due to the nature of audit procedure. So we need to write only that relevant part here. So nature of the audit procedure, a lot of time there is a possibility that management may not provide the information. If there is a fraud that is committed, fraud is a sophisticated and carefully organized scheme. It is very difficult to detect a fraud. It is easier to detect an error as compared to a fraud. And lastly, they say audit is not an official investigation into alleged wrongdoing. So here, when they ask you practical and legal limitation, you need not write all the inherent limitation. You will write only the nature of audit procedure. Next, in certain subject matters, limitations on the auditor's ability to detect material misstatement are particularly significant. So now they are saying that there are certain cases where identifying misstatements is particularly significant, very difficult. What are those scenarios? Again, it is part of inherent limitations answer. So whenever there is fraud, so in case of fraud, it is difficult to detect a material misstatement. Next, whenever there are related party relations and transactions, because in case of related party transaction, the opposite party might agree, these are the terms of transaction, hence it is always difficult to detect a misstatement. Secondly, occurrence of non-compliance with laws and regulation. See, in India, there are multiple laws and regulation, and it might be a case that we are not aware about or non-compliance about certain laws and regulation. So this is not very easy to identify. And lastly, future events or condition that may cause the entity to cease to continue as a going concern. So whether if there is an event occurring in the future which may affect our going concern, so in this are few circumstances which are difficult for an auditor to identify. So in case of certain subject matter, limitation of auditor's ability to detect misstatement are particularly significant. So these are the 4 examples that you will have to write. So here both the questions were based on what? Inherent limitation. First one was talking about nature of audit procedures, second was talking about other subject matters, and question number 1 was in context of SA 210. Here it was SA 200, they were asking you the objective. So this was our chapter number 1, nature, scope and objective of audit. Moving ahead with chapter number 2, that is audit strategy, planning and programming. See, I'm not wasting your time on questions which are already covered in the JKC material. We have already studied it. So we'll take all these things very briskly. We'll spend time on questions which are new, which have not been covered in the module or anything as such. So here all the questions have been covered by us. What is question number 4 asking? You have been appointed as an auditor of MKP Limited for the first time. Discuss briefly the factors to be considered by you establishing the overall strategy. So if you go on page number 44 of the JKSC textbook, we have already discussed this, that whenever we develop a strategy, what are the factors to be considered? So firstly, we need to consider the characteristics of the engagement. So identify the characteristics of the engagement. So what type of engagement it is? So we understand what is a scope. So for example, whether it is audit, whether it is review, whether it is assurance, whether it is related service, we also need to understand what type of engagement characteristics, whether it is a telecommunication audit, whether it is a banking company's audit, what are we exactly supposed to do? We'll understand the characteristics. Secondly, we'll ascertain the reporting objectives. See, we need to understand when are we going to report, so we can make a timetable. So we'll ask the management, what are the reports and when are the reports expected? For example, in case of a normal company, usually a report is given by 30th of September. Okay. In case of a listed company, we need to give quarterly reports as well. In case of a banking company, we need to give LFAR by 30th of June. So we are understanding what are the objectives, how frequently are going to communicate with management, on what dates are we going to meet to the management. So we need to ascertain the reporting objective, which will help us in planning the timing of audit. Thirdly, consider the factors that in auditor's professional judgment are significant. So whatever factors he thinks so are significant while directing the team of the work, while directing the team, So he will have to consider those as well. Consider the results of preliminary engagement activities. See, we have discussed under SA 220 that whenever we accept an appointment or continue, in that case what we will initially do is check CSI. Firstly, we will check are we competent enough. Secondly, we will check can we comply with ethical requirement. Thirdly, we'll see whether any significant matter has arisen during the year because of which we must not continue. Whether we have trust on the integrity of the principal owner. So for example, the owner is Vijay Mallya, then I do not have trust on the integrity of the principal owner. I may not be willing to accept. So we'll have to consider all these preliminary engagement activities. And lastly, ascertain the NTE of resources that are necessary to perform. So how many assistants are required, whether any experts are required, what will be the time that will be required. So we'll have to consider all these factors while we are developing a strategy. So we have already covered this point. Next, they are saying the audit plan includes the nature, timing and extent of audit procedure. So this point also has been covered. If you go to your JKSC textbook, it has been covered on your page number 42. So, we need to say what is going to be covered in our plan. So, what is going to be covered in our plan? We will mention the NTE of RAP as per SA 315. What are the risk assessment procedures that we are going to perform? We need to have a plan for NTE of FAP, that is further audit procedure as per SA 330, and we need to have NTE of other audit procedures. So in plan we will consider three things: NTE of RAP, that is risk assessment procedure, NTE of FAP, that is further audit procedure, and NTE of other procedures that we need to perform, again which has been covered. Now they are saying while establishing an overall strategy, auditor shall consider the reporting objectives. So if you see the first answer that we discussed here, we said we will have to ascertain the reporting objectives. Now they are asking you to elaborate that particular point, that what do you mean by that? In establishing overall strategy, the auditor shall ascertain reporting objectives. Explain with examples. So here they are asking examples. So for example, timetable for reporting. So we discuss in case of a listed company, every quarterly we'll have to give reports. So we need to understand whether there are interim reports or final reports. Secondly, organization of meetings with management and those charged with governance so that we can discuss the NTE. Discussion with management and those charged with governance regarding expected type and timing of the reports to be issued. Again, discussion with the management regarding expected communication on status of audit work throughout the engagement. So for examples, one was timetable for reporting. These 3 points are discussion with management and those shared with governance. Here they are talking about discussion about the NDE. Second, they are talking about discussion of the type and time of report. Lastly, they are discussing about status of the work, how much work has been completed. So these are the reporting objectives that we need to consider. So this was our chapter number 2, audit strategy, planning and programming. Moving ahead with an important chapter, that is audit documentation and evidence, a very high weightage from this particular chapter. First question that they have asked is, return representation are provided by management to the auditor when requested, explain. Honestly speaking, a very vague question, because you can write multiple things here. What are they exactly expecting from us? So this question is important for you to go through, not because you don't know the answer, because you know a lot more about it and you have to restrict yourself to what ICI is expecting. So in this particular question, what they have stated is, all they have given is the definition initially, that what is a return representation. The return representation, the auditor shall request return representation from management with appropriate responsibilities for the financial statement and knowledge. So here they are asking, so here these 2 points, they are focusing on whom can we ask this return representation. The return representation are requested from those responsible for preparation and presentation of financial statement. So I will ask from the accounts department, finance department. I will not ask marketing department or production department to give me this confirmation, because they are not responsible for preparation and presentation of financial statement. Now, those individual, those means person who are responsible may vary depending upon the governance structure of the entity. So it may depend on case to case. In case of sole proprietors, he himself is responsible for every decision that he's making, marketing, production, even preparation and presentation. We'll ask him. But in other organization, there are hierarchies. I will ask the relevant person. Written representation, therefore, may be requested from the entity CEO, CFO, or other equivalent person in the entities who do not use such title. In some circumstances, other parties such as those charged with governance are also responsible for preparation. So here they are asking from whom are we going to ask written representation. Second point they have added, if the management does not provide written representation, then what are we going to do? So we will discuss with the management. We may take appropriate action. We will reevaluate the reliability of representation. If you recollect, all the students have studied with me, what do we call this as? DAR. D, discuss with the management, take appropriate action, and lastly R, reevaluate the integrity. So in this answer, what they have stated are two things. One is from whom to ask written representation, and secondly, if management does not provide, what are we supposed to do? So since the question is very open-ended, you will have to focus on the solution. If they ask you such open-ended question that written representation are provided management to the auditor, explain. You will have to restrict yourself to this particular 2 points because this is what they are expecting. Right. Second, audit documentation refers to a record of three things. Explain clearly stating the objectives and the nature of audit documentation. What is audit documentation? It is a record of three things. What are those three things? It is a record of audit procedures performed. Second, relevant evidence that are obtained. And a third, the conclusion they are reached. So it is nothing but a record of three things. Now what are your objectives? A sufficient and appropriate record for basis of the report. So we can prove that the report is based on sufficient and appropriate evidence. Second, evidence that the audit was planned and performed in accordance with the essay and the applicable and legal and regulatory requirements. So we can prove, in case if someone throws allegation on us that you have not done your audit appropriately, then we can prove with the help of documentation that we have followed the standards and legal and regulatory requirement. And lastly, evidence for auditor's basis for conclusion about the achievement of the overall objective. So with the help of documentation, we can prove that this is how we have achieved the overall objectives of audit and we have given an opinion. This point is a repetitive point. So we have already covered under this point evidence that the audit was planned in accordance with the essay. Same point has been repeated. So these are the three objectives that you will have to state. So here the question was about essay 580, that is written representation. This was about essay 230, that is audit documentation. Next, 7A, the auditor shall assemble the audit documentation in audit file and complete the administrative process of assembly file on a timely basis. So though related to documentation, this point has been covered under SQC1. What does SQC1 say? We need to assemble the final audit file within 60 days from the date of the auditor's report. 60 days from the date of the auditor's report. Once the assembly has been done, we cannot make any changes. However, changes of administrative nature are allowed. For example, deleting or discarding superseded documentation, sorting and collating, signing of completion checklist, and documenting the evidence is allowed. This is also an answer which have already been covered. So this we have covered in the topic of audit documentation. Along with audit documentation, we have discussed this. So somewhere if you see so far from chapter number 1, chapter number 2, chapter number 3, so far out of the 7 questions, nothing has been asked new, only this particular question. This also we have covered. You just need to read it so you know where to restrict your answer. So nothing new. They have asked what they have been asking so far. 7B is also on essay 500, a question which we have already covered. So not that just we have covered, they have given all this content in the module. These questions have been asked in the past, so it is from past institute material only. They have not framed anything new as such here. Now what is question 7B saying? T Limited has used the service of an expert for the purpose of physical verification of inventory which is appearing in the financial statement of the company at 75 crores. Discuss the broad parameters auditor would take into consideration while deciding about the using the work of performed by the management expert in physical verification of the company's inventory. So they are talking about SA 500 that you want to use the work of management expert. What are we going to do? We'll see whether the management expert was competent enough, whether he had the capabilities and the objectivity. Second, we need to obtain understanding of the work of that expert and evaluate whether the work of that expert was appropriate. So very simple answer, we need to see whether he was competent. Then we need to see, obtain an understanding of the work of that expert, and lastly we need to evaluate the appropriateness, right? So this was SA 500. Next, again question 8 is based on SA 500. Audit evidence explains what constitute audit evidence in audit of financial statement. A combination of test of accounting records and other information is generally used by the auditor to support his opinion. To mark this also as important. So here I have marked question 6 and 8 important. This you will have to go through. So what they are saying is, okay, while auditing, we do a combination of test of accounting records, also other information. Explain and discuss the meaning of audit evidence in detail. So here, what are they expecting from you to explain what are accounting records, what are other information. So accounting records means from which the entries and everything have been developed. For example, record of initial accounting entries, supporting records such as check and records of electronic fund transfer, invoices that we have, contracts that we have, general and subsidiary ledgers. What is subsidiary ledger? Purchase book, sales book, purchase return book, journal entries, and records such as worksheet and spreadsheets. But when it comes to other information, what do they mean by other information? They are talking about something which is not related to the financial statement. For example, minutes of the meeting. We will have to verify the minutes also. We will have to obtain written confirmation from the trade receivable payable, which we have discussed in SA 505. Manuals containing details of the internal control. So we need to have a combination of tests. We will test the accounting records, underlying records on which based entries have been passed, and we will also test the other information. So this is also one important answer that you need to go through from here. So this was our discussion of chapter number 3, that is audit documentation on audit evidence. Moving ahead with chapter 4, risk assessment and internal control. So obtaining understanding of the entity and its environment, establishing a frame of reference within which auditor plans the audit and exercises professional judgment throughout the audit. What is the word they have stated here? Throughout the audit. So what they are trying to say is that this is a continuous process. If you recollect, we have studied this. If you go to our JKC textbook, it is on page number 45, that this is a continuous process. If you recollect, what was our code? Ram Das. So assessing ROMMS, it is a continuous process. Throughout the audit you will have to do it. Second, considering the appropriateness and application of the accounting policies was A. Next, determining materiality is a continuous process. Next, D, developing expectation when using analytical procedure. Next, A, evaluating sufficiency and appropriateness of the assumptions that the management has used. And lastly, identifying whether special audit consideration may be necessary. So again, a topic which we have already covered. Next, analytical procedures performed as risk assessment procedure may identify aspects of the entity which the auditor was unaware. So here again, this particular point we will have to go through. So if you recollect, analytical procedures we had discussed can be used at 3 stages: planning stage, testing phase, and completion phase. Now here they are asking, it can be used as analytical procedure as risk assessment. So in short, we are using at which phase? Planning phase. May identify aspects of the entity which the auditor was unaware. So for example, we can apply analytical procedure at planning phase. Let us say gross profit in the previous year was 40%. This year the gross profit is 20%. We'll understand there is something wrong. So it may help us understand a lot of aspects. So let us go through this answer. Analytical procedure as risk assessment may identify aspects of the entity which the auditor was unaware and may assist in assessing the risk of material misstatement in order to provide designing and implementing responses to the assessed risk. So what they are trying to tell us is it can help us in performing RAP, based on which we can design implementing the responses. So based on this we can decide what should be the NTE of FAP. Second, analytical procedure as risk assessment may include both financial and non-financial information. For example, relation with sales, square foot of selling space. So whenever we apply analytical, we consider both financial and non-financial data. So this was point number 1. This was point number 2. Point number 3. Analytical procedure may help identify existence of unusual transactions or events and amounts, ratios and trends that might indicate that matters that have audit implications. So if we find some unusual transaction or ratios are different, trends are different, like we discussed, there were always GP was 40%, this time the GP ratio has gone down to 20%, it might give us an indication something is wrong. Unusual or unexpected relations that are identified may assist the auditor in identifying the risk of material misstatement, especially the risk of material misstatement due to fraud. Next, however, when such analytical procedure use data aggregated at a high level, the results of those analytical procedure only provide a broad initial indication about whether a material misstatement may exist. So in case if the GP ratio was 40 and now it is 20, it is just indicating that a material misstatement may exist. We cannot identify the material misstatement here. It is just an indication that it may exist. Accordingly, in such cases, consideration of other information that has been gathered when identifying the ROMMS together with the result of analytical procedure may assist auditor in evaluating the results of analytical procedure. So he will consider other information along with analytical procedure to gain a better understanding. So here when they ask you analytical procedure as risk assessment, this is what you will have to write. So far in the descriptive question I have marked question number 6 important, question 8 important, question 9b important, 3 questions. The rest of the questions are there as it is where it is in your textbook. You just need to see whether you were able to interpret, and if you were not able to interpret, no worries. At least go to the textbook, mark there this is a RTP November 23 question and just revise it once more. Next, the risk of material misstatement refers to the risk that financial statements are materially misstated prior to audit. Discuss the level at which this risk may exist. See, the ROMMS, that is risk of material misstatement, may exist at 2 levels. One is at the financial statement level and one is at the assertion level. So here we need to see at which 2 level. So one they are saying at the overall financial statement level, second at the assertion level. So there is a risk that the whole financial statement may be materially misstated. When we say talk about assertion, we think some account balance, classification, transaction may have a misstatement. So for example, if we are worried only about valuation of inventory, so ROMMS is not for the whole of the financial statement. We are thinking that that risk is only at that assertion, it is only for valuation. If we think depreciation has an issue, we think there is a risk of material misstatement only for measurement of depreciation. So if you recollect assertions that we have discussed in the class, what are the assertions? MP cover. What is MP cover? Measurement. What is P? Presentation. What is C? Completeness. Then cutoff. Next, occurrence. Next is valuation. Next, existence. And lastly is rights and obligation. So when we say financial statement level, we think so a lot of things at the financial statement level has this. When we talk about assertion level, either of the assertions, so for example, we are worried about the valuation or the measurement or the presentation, this is called at risk at the assertion level. So risk will be at 2 levels, one is at the financial statement level or the assertion level. Right. So this was our chapter number 4. Chapter number 4 also has a good weightage in the exam. So both the chapter number 3 is important, as well as chapter number 4 is also very, very important. Chapter number 5, that is fraud and responsibilities of auditor in this regard. So again, both the questions are covered in JKC book. I have already stated the page numbers. The fraudulent financial reporting often involves management override of control that otherwise may appear to be operating effectively. Let's state any 3 techniques by which fraud can be committed by management override of control. So if you recollect our code, what used to say was CFAR. So how can they commit fraud? Firstly, concealing or not disclosing facts. C2, engaging in complex transaction. F, recording fictitious journal entries. A, inappropriately adjusting the assumptions. A2, omitting or advancing or delaying the records. And lastly, altering the records and terms related to the significant transaction. So how do we override management of controls? I mean, we have already covered this. Next, write the circumstances that indicate possibility of fraud due to problematic or unusual relationship between auditor and management. So if you recollect our code, what we used to say here was duri. What we used to say here was D2, U2, RI. That is denial of access to records. D2 was denial of access to the key IT operations and the staff. U1 was undue time pressure imposed by the management, then unwillingness by the management to facilitate auditor with key electronic files. Then R was unusual delays in providing with the requested information, and lastly I was unwillingness to address the deficiencies in internal control. So this was problematic or unusual relation. There were other reasons also in the textbook. If you recollect, go to page number 180 to 5.3. Beneath that, there is other reasons that have been given, and ICI in the RTP have printed those other reasons as well. So if you recollect, our code was TAPE. So T was tolerance of violation of entities code of conduct, accounting policies that appear at variance with the industry norm. P was unwillingness by the management to permit the auditor to privately meet with those charged with governance, and frequent changes in the accounting estimates. So again, the answer has already been covered under that. So they have stated both the points. Make sure you also state both the points. This I am marking important, not because this is not covered, not because this is a new question. Again, you need to look at the solution and understand that you will have to write Duri wala answer as well as tape answer. You will have to state both of them. So this is chapter number 5. Moving ahead with chapter number 6. When the business operates in a more automated environment, we are likely to see several business function and activities happening within the system. They are asking us to list down the business functions and activities happening within the system. So basically what they are asking is relevance of the IT system. Again, covered on page number 204 of JKC textbook. Just let us go through the answer from here. We have covered there. So what are the activities? For example, computation and calculations are automatic carried out while we are using computers. Accounting entries are posted automatically, so we just pass journal entry, the rest of the things are done by computer. Business policies and procedure including internal control are applied automatically, so a lot of controls are automated these days. Reports used in the business are produced from the system. Management and other stakeholders rely on this report and information produced. Lastly, user access and security are controlled by assigning system roles to the users. So this is nothing but relevance of the IT system. Next, list down points that auditor should consider before understanding of the company's automated environment. Again, on page number 205, we have discussed this. We need to consider whether the information system are being used. If it is used, what is the purpose? Whether it is using financial or non-financial reason, whether the IT service is located locally or globally, what is the architecture, whether it is cloud-based, whether it is web-based, what are the versions of that particular software, what is the interface within the system, whether multiple systems exist, then whether it is in-housed or whether it is packaged, whether we have outsourced the whole thing, who is the key person, CIO, CISO, and who are the administrators. So this is nothing that what are the things that we need to obtain an understanding for. So I'm not wasting your time on questions which we have already covered. We will be discussing at length questions which have not been covered in the ICI module previously or JKSC textbook previously. Moving ahead with chapter 7, audit sampling, which is nothing but your SA 530. Chintamani Limited appoints Chintamani and Chintamani as statutory auditor for the year 22-23. Chintamani seemed to have different opinion on approach to be adopted for audit of Chintamani Limited. Money is of the opinion that 100% checking is not required. They can rely on audit sampling techniques in order to provide a reasonable basis on which they can draw a conclusion. Chintamani is concerned whether the use of sampling has provided a reasonable basis for conclusion about the population. You are required to guide Chintan about his role if audit sampling has not provided a reasonable basis for conclusion about the population that has been tested in accordance with SA 530. So here we need to evaluate whether it has given a reasonable basis for conclusion. So already we have covered this. You can go to your JKSC page number 232. We will see whether the results of sample provide a reasonable basis for conclusion. If they do not provide a reasonable basis for conclusion, we will have to request management to investigate the misstatements that have been identified, and we may have to tailor the nature, timing and extent of audit procedure. So you can mark this particular point important. Why? Though we have covered it on page number 232, we have discussed a lot of examples for test of controls, test of details. They are not expecting you to write all those things. They are just expecting you to write this, and you write in case if this does not provide a reasonable basis for conclusion, we will have to request management to investigate, and we will have to change the NTE, that is nature, timing and extent of audit procedure, right? So this was question number 15, that was SA 530. Next, in order to the auditor is required to project misstatements for the population. Again, the same question is covered on page 232 of our GKSE textbook. Here we need to project. If it is an anomaly, we need not do anything, we will exclude. However, if the anomaly is still uncorrected, if you recollect, we will have to add it to the projection of non-anomalous. For test of details, we will definitely project, but for test of control, no explicit projection is required. So both the questions have been covered. So this was audit sampling. Moving ahead with chapter number 8, analytical procedure. So Flower Limited presented its financial statement for the year 22-23 to its auditor for expressing an opinion thereon. The auditor, while carrying out the audit, started comparing various items of profit and loss of the year under audit with the previous financial year. What is the auditor trying to achieve by carrying out those comparisons? So here we need to see what do we understand by comparing this year's financial statement with the previous. So again, mark this important, you will have to refer this particular question from here. So what they are trying to say is, if the balance is included in the statement of P&L of an entity compared with those of the P&L of the previous year, it would be possible to find out reasons for increase or decreasing the amount of profit of those years. So we'll be able to understand why have there been changes, whether there was change in the expenses and everything. Secondly, setting up certain expense ratios on the basis of balances included in the statement of P&L for the year. Comparing the same with the ratios of the previous year, it is possible to ascertain the extent of increase or decrease in the various items of the expenditure. So what they are trying to say here is, if we set up some expense ratio, for example, let us say we set up advertisement to sales ratio. We say what was the advertisement to sales ratio in the previous year. Let us say it was 5%. This year we see it has gone to 10%. So we need to understand why there is a change in this particular ratio. If the differences are found to be very material, auditor would ascertain the reasons therefore. So why have been there a change? See, if there is a small change, it is okay. But if there is a change, we need to ascertain the reason. See, there is a possibility that it might be a valid reason. Last year, we were doing less advertisement, the budget was less. This year, we have increased the advertisement budget to boost the sales. So it might be a valid reason as well. Next, they are saying it is possible to identify existence of unusual transaction amount or ratios. So when we compare this year with the prior year, it is quite possible that we may identify unusual transaction. See, if things between the previous year and this year are the same, very good. But if there are some unusual transaction, it is easier for us to identify. So here you will have to mark this. You will have to go through this particular question. So far in the descriptive question, what we have done is we have marked question number 6 important, 8 important, 9 important, 10 important. So 9B and 10 important, 4 questions, 12 important, that is 5, and question 15 important, and question number 17. So these are the questions that you must go in a detail from the RTP. Next question, which we have already covered, you can go to page number 250 of the JKSC textbook. What they are trying to ask is, when designing and performing substantive analytical procedure, either alone or in combination with test of details, with SA 330, the auditor should determine the suitability. So what they are asking is suitability of analytical procedure. So here let us discuss the suitability. So we have discussed this on page 250. What we will have to see is the application of planned analytical procedure is based on expectation that relationship among data exist and continue. So there will be relationship between financial and non-financial data, and that will continue. Suitability will depend upon auditor's assessment of how effective it will be. A lot of time even unsophisticated predictive models may help. So this is talking about the suitability. I am not taking you in detail because we have already discussed this particular question. So this was analytical procedure. Now moving ahead to chapter number 9, which a lot of students are not really confident about, audit of items of financial statement. For this chapter, what should be your approach? All the students have studied with me. We have made beautiful summary notes which can help you revise a lot of questions. Apart from that, what you must do is take RTPs of last 6 attempts. If you are short of time, if you are not able to do anything, take out RTP of last 6 attempts. Go through all the RTP of last 6 attempts, last past 6 papers. So I'm asking you to do 6 attempt RTP, 6 past papers. If you are short of time, not able to memorize everything, these are the few points that you must memorize. So just do this 6 papers, 6 RTPs, 6 papers. So 12 material I'm asking you to do. Only question stated there. Make sure you do those questions. Still you will be in a position to answer something. But all the students have studied with me in the lectures. We have made beautiful summary notes where we have covered every point in the most effective manner, where in a short time you can cover the whole chapter. So for all the students, you must do the notebook that we have done. Only these papers are only for students who does not have time and are not able to do justice. So moving ahead with chapter number 9, what is question number 19 asking us? Messrs. MP and Company Chartered Accountants have been appointed auditors of LMP Private Limited. The partner of the firm asked auditor to carry out examination in depth for the payment made to creditor. Advise him about the documents to be verified. So we are talking about trade payables. So they were talking about examination of payment made to trade payables. What are the documents that we'll have to verify? Mark this important. Let us go through this particular answer. So here in this case, what we will have to check is, if we want to check payment to the creditor is in there, so we want to check whether the purchases are correctly recorded. So firstly, what we will check is the invoice and the statement, because see, if the purchase recording is incorrect, payment will also be incorrect. Second, entry in the inventory record showing that goods were actually received. Only then, if the goods were actually received, risk and reward will be transferred to us. Only then we will make a payment. How do we know the risk and reward have transferred? As soon as we receive the goods from the opposite party, we issue them a goods receipt note or a inspection certificate that will show that goods have actually been received and the risk and reward has transferred. And lastly, a copy of original order and authority showing the goods in fact were ordered by an authority, so that the person who was competent enough to order has placed an order. So whenever we want to check that the payment made to the creditor was in there, these are the things that we will check. Next is hire purchase. You can go to page number 541. We have already discussed. Under hire purchase, we will check the agreement. Under agreement, we will check the hire purchase price, the cash purchase price, the date of commencement of this particular transaction, what are the number of installment, for which goods is the hire purchase, and ensure that the payment has been regularly received. A very simple answer. Question 20B is again important. Now what they are talking is about, they are asking you about cut-off procedure. So a junior accountant of a limited company has not separated transaction one period from those in the ensuing period. As auditor, the correct procedure to be followed and the areas in which it can be applied. So here what we are saying is that transaction need to be bifurcated from one period to another. So we need to follow a cut-off procedure. So year ending in India is 31st of March. So purchase sales we need to bifurcate in two periods. For example, it is financial year 22-23 and 23-24. For example, the goods were purchased on 28th of March. However, the goods are received, risk and reward have been transferred on 4th of April. We will record this purchase on 4th of April and not 28th of March. See here what will happen if we record on 28th March, it will be recorded in financial year 22-23. However, we need to record it under the financial year 23-24. So here we need to check whether the cut-off procedure, whether the transaction have been recorded in an appropriate accounting year is to be checked. So here what they are trying to say is accounting is a continuous process. Your purchase, sales, all these things are never going to halt. Even if 1 year is over, the second year transaction will be started to be recorded. So accounting is a continuous process because the business never comes to a halt. It is therefore necessary that transaction of one period need to be separated from those in the ensuing period so the results of working of each period can be correctly ascertained. This particular is technically known as what cut-off arrangement that we have understood in assertion. Now, this cut-off is an essential part of the internal control. See, this cut-off is not followed if this year's transaction are recorded in next year. This year there will be an understatement. Vice versa, next year's transaction are recorded in this year it will be an overstatement. Hence, cut-off has become an essential internal control. Now, accounts other than sales, purchase and inventory are not usually affected by the continuity of business. So cut-off will be applicable only in case of sales, purchase and inventory. Only there we need to say when the risk and reward were transferred. The auditor need to satisfy by examination and test check that the cut-off procedures are followed. For this, what we will check that the goods purchased, property in which has already been passed on to client, where the risk and reward have been transferred to the client. We need to see goods are purchased. So when the goods are purchased, when the risk and reward are transferred to the client, it means we need to record it in purchase in this year itself, and we need to make sure that we have shown a liability as well as creditors in the books of accounts. Likewise, if we have sold the goods and the risk and reward have transferred to the third party, then in that case we will have to ensure whether we have recorded sales and whether a debtor has been created. So this was a cut-off procedure. Lastly, what they are saying is auditor may examine document evidencing the movement of inventory. So what we can check is the stock register, we can check the warehouse register, when the goods have come in, when the goods have gone out. So we understand when the risk and reward have transferred. ASN 9 explains us when the risk and reward are transferred in the goods. Only then we can record the purchase and sale on that particular date. So this was cut-off procedure, an important question which you must follow. Chapter number 10, all the questions we have already covered. I am not wasting your time here. What I would insist is you can go and see that particular recorded part once again if you are not aware. There will also be a marathon revision lecture in which we are going to discuss everything in quite a detail. So you can go there and revise it. What they are asking is provision regarding first auditor of a government company and non-government company, subsequent auditor of a government company and non-government company. So they are talking about section 139. Next, they are talking about 143J, what are the other reporting requirements. So you need to state that and state the matters to be included in the auditor's report under CARO 2020 for Nidhi company and transaction related with related parties. So all the points have been covered in our notes. We have discussed this very much at length. If I start again discussing the appointment of first auditor, it will again take 20-30 minutes. Every answer will take 1 hour. So probably we'll waste 1.5 hours just on redoing these things which we have already covered. So you can go to that. All the students who are not JKC students, have not studied with me, we have a marathon revision lecture. You can go and see this particular part where we have covered everything very comprehensively and you will be in a position to crack this. So this was a discussion about company audit. Moving ahead with chapter number 11, that is audit report. So they are saying communicating key audit matter in the auditor's report in the context of auditor having formed an opinion on the financial statement as a whole. Communicating a key audit matter in the auditor's report is not a substitute or alternative for a number of important matters. We have already discussed this. Communicating key audit matter is not a substitute for disclosure. It is not a substitute for modifying the opinion. It is not a substitute for reporting under SA 570, and it is not a separate opinion on individual matters. So already a topic which we have covered under SA 701, page number 436. Next, what an auditor should state in the basis of opinion section of the auditor's report. When the auditor modifies the opinion, explain the amendment he should make in this section. Now, do you recollect, my friends, all the students have attended lectures with me in the classroom. We have done the format of the report, but I have also taught you, in case if we modify the opinion, what will be the changes in the basis for opinion. If we write qualified opinion, adverse, disclaimer, we had written a tabular format in our notebook of how to go about it, how to write it. So here they are asking you what is included in basis for opinion para. We have studied this under page number 428. Under basis of opinion para, if you recollect, what we will write is SIA. First, that it was conducted in accordance with standard on auditing. Second, auditor has sufficient and appropriate audit evidence. Auditor is independent and meets the ethical requirement, and refer to the auditor's responsibility. But if we amend, then what are we supposed to do? If we amend basis for opinion para or basis for disclaimer, within this section include a description of matter giving rise to the modification. So we'll have to write what are the matters which are giving rise to the modification. So this is basis for opinion para, and this particular part, just go through it, hence I'm marking this important. If there are amendments, all they are expecting you to do is, within this section you will have to include a description of matter that is giving rise to the modification. So why have you given qualified, why have you given adverse, why have you given disclaimer, you will have to add that particular part. So this was audit report. Next, your firm has been appointed as a branch auditor of SP Bank. Discuss the primary evidence you will look into while carrying out the verification of advances. If you recollect our lectures, I had marked this as a frequently asked question in RTP. I told you most frequently, almost in every other RTP, they ask you this particular question. So this is audit of advances, which we have already covered in our JKSE lectures. So here we have studied this under page number 482 of JKC textbook. We need to, if you recollect our code, what would you say? Odd UV wrap. That is the amount outstanding and the balance sheet date. Amount represents the amount. So this is outstanding. It represents the amount due to the bank. Then amount due to the bank are appropriately supported by documents. Then we need to check if there is any undervaluation. We will talk about valuation. Next, whether they are recognized as per the accounting policies, whether the provisions have been created, whether there are no unrecorded advances. So this is audit of advances. Next, question 27. TEP Industries Private Limited, a company engaged in obtaining rice from paddy, is enjoying a CC facility against hypothecation of the paid stocks and book debts, eligible up to 90 days only. The LMV of the bank were rupees 5 crore. The letter sanctioning the above credit facility margin stipulates 25% on stock, 40% on the book debts up to 90 days. While preparing the stock statement, the accountant of the company calculates value of the stock for rupees 5 crores, including 1 crore of rice was lying in a low-lying godown and was completely damaged during the recent floods caused by the river Yamuna. Debtor outstanding are 3 crores, including 50 lakhs outstanding for 6 months. Trade creditors outstanding as on the date are 2 crores. He calculates DP on 30th of June for 3.3 crores. Is he correct? Justify with your working. So we need to see whether the calculation of the drawing power is correct here. So let us check there. So value of the stock was 5 crores. Out of 5 crores, 1 crore was lying in low lying area and it was damaged. So we will reduce that. So effectively we have stock of 4 crores. But out of 4 crores, the trade payables are for 2 crores. So effectively my paid stock that I have paid out of my pocket is for how much? 4 minus 2, it is nothing but 2 crores. So the paid stock is nothing but 2 crores. Now they have said for stock we will keep a margin of 25%. So if there is a stock of 2 crores, we'll reduce the margin by 25%. So drawing power for stock is 1.5 crores. Coming to debtors, we had a debtor of 3 crores, out of which 50 lakhs was outstanding for more than 6 months. We will reduce that particular amount. So debtors is 2.5, but for on that we need to apply a margin of 40%. So on 2.5, if I apply a margin of 40%, drawing power for book debts is 1.5. So 1.5 comes to how much? 3 crore. However, he has calculated as 3.3 crore. Is the calculation correct? No, the calculation here is incorrect. The drawing power that they have estimated is incorrect. And so this was a calculation of drawing power. Mark this also as important. Go through this once. Last chapter, audit of different types of entities. Public money should not be utilized for the benefit of particular person or section of community. List out the exception to this rule while conducting audit against proprietary, and state 6 advantages of audit account of the partnership firm. So both the questions have been covered, page 510 and page 543. So here in case of proprietary, we need to use the funds for the benefit of all, but however there are certain exceptions when the amount is very insignificant, or the claim is due to enforcement in the court of law, or expenditure is in pursuant of a recognized policy. It is only for few people, it is only for example for particular caste or religion. Amount of allowances such as traveling allowances need to be made sure that they are not source of profit to the recipient. So this also we have covered. Again, I'm not discussing the questions that we have already covered in detail in the classroom. And lastly, the importance of the advantages of audit of partnership firm. So this also we have covered, what are the advantages of the audit of partnership firm. So with this we are done with all the descriptive questions of the RTP November 2023. So thank you very much my friends. This was a discussion of November 23 Inter CA RTP. If you have any further doubts, please reach out to one on the WhatsApp helpline. We also have Zoom doubt solving session. Please get in touch with us. We will be happy to help you. All the best. Hope to see you again in season 2, that is CA final. Thank you very much.